please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi, welcome back. You're watching Halftime Report. Let's quickly take stock of what's happening in Europe. The markets should have opened right now, and the expectation at least was that they would open on the higher side, and yeah, about a 0.5% gain across the board. This hope along this US-China trade talks progressing is boding well for the market. So for now, Europe is looking good. But back home, the big story remains the Indian macros. Amidst rising fuel prices and a depreciating rupee, the Prime Minister is likely to hold a crucial meeting this weekend to take stock of the economy. A top government official, in fact, told CNBC-TV18, and I quote, that we have to hold our nerves. According to sources, the government is of the view that it can't take panic steps on both rupee and fuel. So the big question is, will the Prime Minister announce any measures in the weekend meeting? We caught up with PMEAC member Surjit Bhalla and Pranab Sen, the former principal advisor of the Planning Commission, on whether it's time for the government to act. And their stance was very clear. The government should not react at this point. Well, Shireen has also been, on the phone with a lot of people in North Block to try and find out what are the key issues to look out for. So she's joining in now to fill us in. Shireen, what do we watch out for this weekend?
There is a crucial meeting that the Prime Minister is holding on Saturday with top government ministers and officials to review the economy. The message that we are getting from our sources is that while the government is vigilant and weighing its options, it will only act when it feels appropriate. So the message is that they may hold fire for now. The sense is that there is no need for a knee-jerk reaction on the rupee because the economic fundamentals continue to remain strong, and also very mindful, especially within the finance ministry, that fiscal prudence is crucial to ensure that bond yields don't spike further and that the rupee stabilizes. In fact, the finance ministry is clear that it wants to stick to the fiscal deficit target. But remember, it is an election year, so eventually this will require political support and a political call. Specifically on the issue of oil, political demand in the first quarter was to lower fuel prices by almost 5 rupees a litre. Now, the demand was that the centre cut excise by 2 rupees, the state reduce VAT by 2 rupees, and OMCs absorb a 1 rupee hit. But that demand was turned down. The finance ministry clearly believes that it is not advisable to go back to either a subsidy sharing mechanism or act on cutting excise just yet, because that will have a multiplier impact, because the signal it will send out will have an impact on bond yields and then consequently on interest rates, making things even worse for the government. So the path that they would like to take for now is to wait it out, to see how the Iran sanctions impact the oil markets, and maybe, if need be, act closer to November post the Iran sanctions coming in. Remember, the government is weighing its options on oil payment for Iranian crude, also hopeful that the dialogue with the US on importing Iranian crude will be fruitful. The message that the political class, especially within the BJP, is going to be sent out is that an excise cut at this point in time will restrict the government's ability to spend on things like Ayushman Bharat, which is the Prime Minister's health insurance program, and other development schemes. So that's going to be the sales pitch to the leaders within the BJP. Separately, there is concern on GST collections, on GST revenue. But North Block hopes that the direct tax mop-up will offset the shortfall on the GST front. So at this point in time, extreme caution on announcing any other kind of cut when it comes to the GST, and hopeful that things will pick up there. So net-net, the view is that Wednesday's fall and the dramatic recovery in the rupee suggests and indicates that there was overshooting, and that India is in a much better position among the emerging markets because growth is strong and our fundamentals are good, and hence the government believes that the currency should stabilize.
Yeah, right. Thanks so much for that, Shireen. Well, in fact, earlier we spoke to a whole host of experts. Let's hear what they had to tell us.
There is no reason to panic, but the fact is that media has created panic. The fact is that the political system is making a massive issue out of it. So the government has to be seen to be doing something. And I think what the DEA secretary was doing was essentially what the Governor Reserve Bank should have been doing, which is talking the market up. The government has been very measured in the response, and I think they should continue to be so. If at any point the government is seen to be panicking, that would send just the wrong message at the wrong time.
They are sending the message that they believe that the fundamentals of the economy are really sound. They believe that the rupee level is not warranted, the current rupee level that we are seeing. And let's just look at the previous, and they have talked about or hinted that the FCNR, the foreign currency non-resident deposit bonds, are under consideration. Whether they are or not is not really or at issue over here. They are trying to communicate to the market that, listen, we are aware of what's going on, and very emphatically telling the market that this level of the rupee is not warranted by the Indian fundamentals.
Our own fundamentals, whether on inflation, current account as well, the growth outlook is significantly better today. Second, I think the monetary policy regime, having embarked on a flexible inflation targeting regime, to suddenly change tack, sort of do an intermeeting hike to try to defend the currency, sends extremely confusing signals when clearly the inflation and even the core inflation momentum appears to be quite stable. So there is absolutely no need to panic at this stage. The burden is coming both from rupee depreciation and from higher oil prices. And I think at this stage, the fiscal orthodoxy is a lot more important than, the center delivering a 2 rupees cut in excise duty.
The government should not panic. There has been a fundamental base adjustment of the currency in the last few months. All that is required at this point is a signal from policymakers that if the rupee does overshoot, they stand ready to take whatever actions are necessary. And I think sometimes it's just these signals that are required to change market behavior. What we've seen in the last couple of weeks is, a self-fulfilling prophecy. Exporters have stood out, importers are front-loaded. You can change all of that if you signal that beyond the point the government stands ready. So I won't be surprised if nothing is done this weekend. I think that may well be the appropriate strategy. The need of the hour is to be orthodox. It's music to markets' ears that the government reiterates again and again that they will stick to the fiscal target this year, which is the right message to send. I think the RBI has shown us in the last couple of meetings that they stand ready to raise interest rates, if inflation concerns were to arise. We expect that in October we will get another rate hike. So I think if you just, do the orthodox thing, tighten fiscal, raise rates in a manner that does not betray panic, sometimes these things boil over. Right now, I think stick to first principles. Hold your nerve on fuel prices.
They are really moving higher as we speak. A couple of factors really playing out here. The dollar weakness, well, that's good news actually for base metal prices. So that explains why Hindalco as well as Vedanta, both of them moving higher. The other factor in terms of Vedanta is, remember, there has been a lot of selling pressure, particularly from the IT. Now, we'll have to keep an eye out on that, in the coming disclosure as to how much has been sold and how much is left. For the time being, the stock is up close to around 4.5%. So keep an eye out on that one. And not just these stocks, you have some of these banking names. Axis Bank has done a U-turn. At the start of the show, it wasn't doing that great. That has spiked up. IndusInd Bank as well is building on to some gains. And even Yes Bank, in fact, has moved higher in the last few minutes. So definitely the Bank Nifty has seen a strong rally. I think from Wednesday's lows, that one could be up more than 5 to around 600 points out. So keep an eye out on that one as well. But moving on then, the iconic Taj Mansingh will go under the hammer on the 28th of September. And India's two biggest hospitality players, that's the ITC Group and the Tata Group, they are all set for a tough fight to grab the luxury hotel. Sources tell us that both the companies have submitted their bids for the proposed takeover. Kritika Saxena joins us with more details on that. Kritika.
Oh yes, it is the clash of the titans. Two of India's largest hospitality players, ITC and Tata Group's Indian hotels, will be clashing once again for Taj Mansingh. Now, I'll give you a background about the deal later, but to help you understand, the technical bids for this have to be submitted between the 12th of September to the 20th of September. Now, on day one itself, our sources tell us that ITC and Tata Group's Indian Hotels have submitted the technical bids. Now, these are technical bids wherein NDMC, that is the New Delhi Municipal Council, will identify who meet the eligibility criteria, and based on that, shortlisted players are going to be identified by the 25th of September. Now, these shortlisted players will be allowed to bid in the e-auction, which is on the 28th of September. It's a complicated process. NDMC has very strict eligibility criteria, and one of them includes the new operator to give a minimum guarantee fee of 3 crore rupees per month in the first year. So that means almost 100 crore rupees over a 3-year period. Now, so far, and here's the important crucial background, Tata Group has been operating Taj Mansingh since 1978, which is when it won the lease to operate the hotel from NDMC. Now, that was for a period of 33 years, which ended in 2011. Since then, Tata Group has gotten 9 temporary exemptions. The property has been embroiled in a legal battle. After that, there have been 3 attempts to sell the property. So this is the 4th attempt. Will NDMC be the 4th time lucky? Will Tata Group retain this iconic property? A lot of questions have been asked over a period of time. If this auction does go through, it is going to be very critical for Indian hotels, and if at all we see ITC or any other player coming in, it is going to be very critical for all the players involved at this juncture.
Kritika, thanks very much for that. So 2 giants, ITC and the Tata Group, now locking horns over this iconic property. Mangalam joins in to sort of analyze the stock-wise impact on this. Mangalam.
That's right, Sumera. So, you know, as Kritika said, it's been going on since 2011, and 7 years on, three trials of selling the property or auctioning it. It hasn't happened yet. 9 to 10 extensions have been given as well. But for whatever it's worth, Taj Mansingh as a whole contributes about 5% to Indian hotels' revenue and 7% to the company's consolidated EBITDA. Analysts say that, you know, if IHCL does lose this property in the auction, it could shave off about 8 to 10 rupees in terms of value from the per share price of Indian hotels. However, the big question, will the auction really take place? Will this happen this time around, or is it going to be the same as it did in the last 7 years? If in case it does go ahead and win Taj Mansingh, there would be a negative impact, but the impact would be limited as compared to 8 to 10 rupees that would be shaved off as against, if they did not have the property. Why is that? Because, well, it'll be important to know how much more they're going to pay in terms of renewal of this license. And at the same time, will there be that increase in license fee? What is the impact of that? Kritika said about 100 crore rupees would be given over a 3-year period. For ITC, it will be a sentiment positive, but then again, the key is how much money do they pay for it, how much money do they deploy over renovation, and by when does revenue trickle in? More importantly, what does it do to its return ratios, especially given what the management had told here on CNBC-TV18 to us, where Sanjeev Puri said with regards to their hotel business that they won't follow an asset-light model or an asset-heavy model. They will follow an asset-right strategy. Does that fall under their overall asset-right strategy or not is something we'll have to watch out for. But all of this until September 25th, where the eligibility criteria is revealed, the players are revealed, and 28th when the auction happens, if at all it does happen.
Okay, all right, Mangalam, thanks so much for that. Well, all through the day today, the focus remains on 10 years since the Lehman crisis. My colleague Lata Venkatesh spoke with former RBI Governor Y.V. Reddy earlier, and here's a slice of that conversation on how the crisis happened and how India reacted to it.
I became sensitive to the impact of global factors on a domestic economy when I was ED in the IMF.
When you were ED in the IMF, that is 2002?
To 2003, I saw the suffering of Turkey, Argentina, Brazil, Mexico.
Okay.
So therefore, from then on, I felt that one of the most important things for emerging market economies is to be very conscious of the risks from the global economy.
Okay.
And this, after I joined as governor, somewhere around 2000, in a couple of years, I realized that our EMIS as a whole, there are global imbalances and they should be warned. Second is a feeling of discomfort about what was happening. Even in 2005, there's a slight discomfort. Okay. And I think by 2006, again in September 2006, I said that there is excess liquidity. And I think the word I used is there a dark future or something like that.
At what point were global central bankers uncomfortable about the imbalance?
I would say in 2007, when the housing bubble came, and Freddie Mac,
Fannie Mae and Freddie Mac.
And when they started getting into trouble, and when I was discussing with the governors of the central banks, I sensed, the advanced economists, and we used to meet often, I sensed that they were worried that there is a problem. How to say that something very bad is going to happen, the capital flows may go back, and we should be prepared for that. So internally we got prepared for it, but that communication nobody picked up. So when I was almost sure that it would happen is by June, July 2008. And that's where in Manchester I simply said that at that time we used to call it turbulence.
Yes.
It was turbulence.
Financial turbulence.
Financial turbulence. So I said that financial turbulence will become a crisis.
Does it look like India overreacted? Everybody cut rates. So even we have to bring our rates down to, 1% and 2%.
In such a crisis, overreacting is better than underreacting.
Okay.
But that's the beginning.
Yes.
But very quickly it should have been possible to assess that we're not that much affected or whatever it is. But even when the reality of the extent of damage was evident, I think we found it convenient to continue. So on all three fronts, that monetary fiscal policy, monetary policy, regulatory forbearance, all three of them in retrospect, I think they were excessive. And that's secondly, they're prolonged. We were too keen to fall in line with the global trend rather than accept that we were not that badly affected.
Showed you UPL, that stock in fact was gaining, promoter has been creeping in there, and we also highlighted the other smaller stock, that's Uniforce Enterprises. Now that stock in fact now it's locked in upper circuit. We're just alerting our viewers as well. Yes, in fact this is more or less a trading move. Why is that? Because Uniforce's market capitalization should be around 600 crores. It should be a little more now that it's up close to around 20%. We alerted you at the start of the show as well. The float, the number of shares traded are very, very low. And in fact, it holds 5% stake in UPL. So it's more or less a trading move that's playing out because it's classified as a promoter entity. So in all probability, they'll continue holding that. And in fact, that'll be the play that'll go on. It'll move in sync because otherwise it's unlikely that they'll be selling that 5% stake that they hold. But intraday, Uniforce, from the start of the show, after we highlighted it to you, the stock has moved to the high point of the day. But let's get in some trading strategies then and shift focus to the commodity space. Himanshu Gupta joins in of Globe Capital, joins in with some trading strategies. Hi Himanshu, thanks so much for joining in. What are the picks you have for us today?
Hi Nigel, good afternoon.
Afternoon.
The first pick will be from the precious metal segment on gold.
Okay.
I expect the prices to slip lower in today's session. The prices have been failing in the international markets to find, they have been finding a stiff resistance around $1,215, and a stronger rupee in the domestic markets is also putting pressure on the gold prices. So the trading strategy for the day is to go short in gold prices October month contract around 30,600 for a target of 30,350, and a stop loss above 30,700 would be recommended. Okay. The second pick from the base metals pack is a buy on zinc. We have seen select base metals recovering from the lower levels ahead of the trade talks between US and China. We have also seen China posting some strong industrial production and the retail sales number. So I expect broadly the base metals counter to show a strong recovery, and zinc in particular is a recommendation for the day. So one can go long in zinc around 168 for a target of 172 and a stop loss below 166. The last pick would be a buy on a crude oil. Although we have seen nearly 4 or 5% of decline coming in for crude oil prices over the last 2 or 3 trading sessions, but today's today's report from EIA suggesting the demand taking over to be above 100 million barrels per day is something that is likely to push prices higher. I think we can see some short-term recovery in the prices, and one can go long around 4915 in the September month contract for a target of 5,000 to 5,020, and a stop loss below 4880 would be recommended for the day.